Hey guys, what's going on? Going to take a quick look here at a coin called Wormhole. Ticker for this is just W, and I'm currently on the daily time frame. Now, as you can see, this is a new token. There's not much trading action, and I doubt this video is even going to get a lot of views. But I figured I'd point this out because this one is it's trading very technically, and it seems like easy to trade, right? So because we don't have that much price history, the key levels are very significant, right? So as you can see, actually, before I get into it, a couple things. First, if you're not subscribed and you want to get notified when I release these videos, click subscribe, click the bell, and then click on all. Also, if you want a place to trade W and pretty much any of the other coins I talk about on this channel, the links to the exchanges that I personally use are in the pinned comment and the description. Okay, so at first glance, this is a very easy coin to chart. So basically they did an airdrop, it pumped a little bit, then obviously people started selling the free tokens they got. And then since the middle of April until recently right here, middle of June, so for a couple months, it was just trading within this range, right? This horizontal channel. So it would come down, buyers would step in, it would come back up, sellers would step in, just back and forth, right? Recently, just a few days ago actually, it fell out of this channel. So that tells us that if the price eventually makes it back up to the lower range of this channel, which held as the support for most of this coin's history, this should be a strong level of resistance, and that's around it's about 51 cents. Okay, so if you want what should be a high probability trade setup, maybe set an alert just before it so you know when the price gets to it, or maybe a limit order or whatever. Of course, this is not financial advice. And then I imagine a lot of people are going to look to short at this 51 cent level, right? Because as you know, broken support will flip to a resistance. Okay, now as the price is falling, the question is, where do you get support? Because there's no previous price history down at this range, what we'd have to do to identify potential levels of support is, or what I would do, I would use the Fibonacci, right? So I'll run it from the bottom here of this candle all the way up to the top. And then from this, actually, first of all, you can see this long level of support. That was the 618 golden retracement level all the way throughout here, right? So the fact that this 618 retracement level held the price for so long shows me that the majority of traders trading this particular coin are using the Fibonacci retracement based on the logarithmic scale. Now, if I take the logarithmic scale off, here's what the fibs look like. And when I do that, it basically just cut through this 618 like butter, right? There was no response at this level. And here we have the 786. And again, this level was not being respected. So I'm going to put the logarithmic back on. And yeah, you can see this is the level that traders are looking at on this particular chart, right? And personally, I like to use logarithmic as well. Okay, so now that this 618 and golden pocket range is broken, the next Fibonacci down is going to be the 786. And you'll see we're almost there. We came just shy of it when buyers stepped in. So if I personally wanted to get into this, I might start nibbling at it around this 786 retracement level, right? Start building a position. And then I know if it breaks down below here, then there's two potential supports that I see. If this 786 level breaks, it's going to be this downsloping trend line. And you'll see here we have multiple touches on it as a resistance. And as you know, of course, that broken resistance will likely flip to a support. So if this 786 level does break, maybe down around here at the top of this trend line, buyers might be looking at that to step in. However, obviously the ideal scenario for people accumulating a position here around the 786 is for this level to hold, right? So the best thing to do in this case is maybe take it down to a smaller time frame and just look. So here we have the price making lower lows. The first thing that I would personally look at in this scenario is I would look for bullish divergences, right? So as I mentioned, the price is making lower lows. Here there's some signs of a reversal, but let's look at the oscillators to find a divergence. And I am kind of seeing one right here. So a divergence, for example, you see here we have the price making a low, and then right here the price made a lower low. Well, on the oscillator, the RSI made a low here, but then on the RSI relative to this lower low, this was higher than this, right? So we are starting to put in some bullish divergences. However, even though we are near this 786 retracement level, I wouldn't build my entire position in one shot. I would just gradually scale in. And ideally, I would want to be accumulating as close as I could to this 786 retracement level at around 38 cents. Because if I zoom out, if I'm buying here at around 40 cents, and my desired region to take profits on this trade is going to be up here, just before the 786 retracement level. Actually, let's measure that out. Theoretically, if I were to start buying right now at the current price level, I would front run actually the 75. I would look to exit right here. So this would get me 21.84% to the upside. And buying here, if I place my stop loss below the 786, I would risk 7.94%. So that's a pretty good R&R trade. That gives me 2.75. So for every $1 I risk, I could potentially get $2.75. So that's okay. But if I'm accumulating closer to this retracement level, that R&R gets dramatically better. So for example, if I'm able to build a position right here, much closer to that Fibonacci support, well then my risk reward ratio becomes 5.61, meaning for every dollar I risk, I could potentially get over $5 back. So in this scenario, I'm risking less than 5%, 4.67%, to potentially get that 26% to the upside. So that seems like a much more appealing play to me. But anyway, I think that just about wraps it up. There's really not much to talk about on this particular chart, just because it's a new token and there's not much price history, as I mentioned. But I just wanted to point that out. This one seems like it should be very easy to trade because we have some very obvious trade setups, right? We could take a low risk trade off the 786 and then take profit on that just before this broken support resistance kicks in. Or we can just not do anything and just wait for the price to come back up here. If it does come back up here to the 618 at around 53 cents or so, and that could make for what should be a high probability short opportunity. All right, guys, hopefully you found that helpful. Once again, if you're not subscribed, click the subscribe button, click the bell, and then click on all so you get all the notifications every time I put out a new video. And if you want some exchanges to trade W token on and you want to get some bonuses, check out the links in the pinned comment and the description. All right, guys, take care. Have a good day. Bye.